So the market is crashing, and I know you're probably scared. You might not know what's gonna happen next, but it's cool because we're gonna talk about 3 things that you should be doing in a bear market. Now, starting off with number 1, you gotta study these patterns because this is not the first time something like this happened before. I've seen this numerous amount of times, maybe 2-3 times in 1 year. You've seen the market come down in the same way. And when I say this is happening, I mean the price coming down in this type of fashion, because it's always going to be a different narrative, but the price and the patterns are usually the same. There's always variations to the type of way it comes down, but when we talk about downtrends, it's going to be the same situation. All right, so we're going to draw a few examples of what do I mean. Now, using our fancy little marker, we're going to just circle the highs. Notice how they're getting lower. All right, so this is the all-time high right there on SPY. That's a lower high, right? Notice how the price is going lower just based on the highs. Now, this is our first signal that the market could be coming down. Notice as the market was going up, we have our highs getting higher, right? And then our lows also getting higher. All right, now notice at this point, that's where we got a lower low. So that was actually a pretty interesting sign, but then the market gave us a higher high, right? The market doesn't want to make it easy on us, all right? It's not going to give us all the answers right in our face. And usually when the market is shifting, you're going to see the most confusion, and especially if it's a big drop that's coming up, they're really going to try to confuse you. But eventually the basic mechanics of a downtrend is usually going to occur, such as lower highs, which is your first sign, and then you got lower lows. All right, so if you caught this part, right, that little clue, then you want to mark where's your previous low. Now it could be there, could be there. I like this one. Why? Because that shows us the actual start of this big move up. All right, because this was the first high that we're using as a reference, as to say we're making lower highs. All right, so this is what I teach in my course, how to understand highs and lows, which is pretty basic to chart reading, but it's the most significant thing that you're going to need to study, because that tells you what the trend is doing. For example, the price going down means lower highs and lower lows, and if you could spot the highs and lows and understand if they're getting lower or getting higher, then that tells you the downtrend. And if you know the trend, then you can make more money, right? So I always say learning how to chart, learning how to read the chart is a $1 billion skill, right? Because if you get this right, it's a whole lot of money that could come after that. All right, so just one pattern is simply lower highs, lower lows. I'm gonna give you a few more, right? For example, if the price is under this EMA, now you see this yellow line we got there, right? It starts all the way from the left and it continues going, and it's gonna continue to stay on my chart because it's the easiest way for me to know if the price is in a downtrend or uptrend. Okay, so you can see times where the price was going up, we was above this yellow line. When the price was going down, we're below. So not only do you have lower highs, lower lows to tell you when a downtrend, you also have moving averages, aka EMAs. Now I have 2 on my chart. I got the blue one and the yellow one. They both serve different purposes. The blue one is my short term, while my yellow is my overall longer term average. And you want to know the trend long term, and you want to know the trend short term if you really want to get a good grip on what the trend is doing. All right, next up we got broken ranges. So for example, the price is always creating ranges. Like if we take this entire chart, for example, this is the bottom and this is the top. That's a range, pretty much a sandwich where the price could just move up and down and do whatever it wants. But once it breaks that range, then that's telling you that there's likely a shift happening in the trend. So for example, if we take some of these smaller ranges, like down here, you can see when the price broke through it, we had a nice signal that the price could go down. So when you pair the lower highs, when you pair the price being below the EMAs, when you pair it up with broken ranges, then you're getting a high probability of the price starting to move down. And you could vice versa use those same mechanics to know if the price is ready to move back up. All right, so I have just one more as a bonus. I didn't really plan to put this in the video, but you could also use volume as a metric to understand what the trend is doing. Notice how this volume is increasing as the price is going down, which tells you we have pressure, right? AKA increasing activity in the direction going down, which signals the price going down even further. All right, so that was a lot of information for tip number 1, and we're gonna keep it moving because we got tip number 2 coming right at you. All right, which one we gonna talk about? Okay, I got a few, so I gotta really choose just the best ones and the most general ones for you guys, because I do save some information from my course, but this is some gems I just want to make sure that you guys have. And we're gonna start off with avoiding breakouts. So breakouts are usually something beginner traders love because it's very easy to spot. For example, we could draw this resistance from that high to the left. Now once the price breaks above it, like here, people like to enter and expect the price to continue going up. And you could notice that if you tried that, like, it could have kind of worked if you were scalping, but if you held it, then you would have got chopped up. Price came right back down. So what am I saying? I'm saying that in a bear market, if you're trading breakouts to the upside, most likely it's gonna turn into a fake out, right? Breakouts are fake outs when we're talking about trading the upside in the bear market. So they always say the trend is your friend until the end, and that's pretty true. So you don't want to fight the downtrend and try to buy call options or try to buy anything really that isn't moving with the overall trend. All right, now there's gonna be a few plays, few stocks, few markets that are moving up while everything else is moving down, and you just gotta be prepared and remember that it's a bear market. So just don't fall for anything that's moving up. Focus on what the trend is doing, and we gave you some things that you could study in our first tip. All right, now another thing to know is things are gonna get really choppy in a bear market. All right, that first initial move down could be nice and strong and straight to the point, but then after that you might get a lot of chop and a lot of range activity while the market is still moving down. So you got a lot of people who's expecting the price to go down, and once it goes down, they're expecting it to move back up and save the day. But the market takes advantage of the people who buy in too soon, and they sometimes become liquidity, and the market goes down even lower. All right, cool. So we're gonna move on to number 3. All right, so what should you be doing in a bear market? The last one we're gonna talk about is looking for resistance if you're a trader. All right, because these are your opportunities to make money. In a downtrend, we usually have the price moving on up, but if it reaches a level of resistance, then the price can move down, and it's as simple as that. So what's stopping you from making money? It's you not drawing resistance, right? That's number 1. That's you not paying attention to where resistance is when the market opens, right? Because once you draw it, you can't forget about it, right? There's many times where you might have drew the right level and then you went back and you're like, man, it actually worked out. And you're like, I coulda, shoulda, woulda. Well, that's where execution is different, a different skill than actual charting, right? Being an analyst is takes skills of an analyst, and being a trader takes skills of someone who actually executes on what they analyzed. All right, so notice that once you do your drawing, there's another job to actually follow up and execute when the market says you're right. So that takes a certain amount of pattern recognition and discipline to execute in the moment. So this is a simple tip. It's just knowing when the market is in the downtrend, we're likely to use resistance levels, and we're also likely to use previous support levels. So for example, this is the SPY 4-hour chart. So if I just draw a line here saying that that's support, I can actually draw that on the actual chart itself. So I'm gonna just draw this blue line, and this is the 4-hour chart. So let's see how that works out. All right, we're gonna zoom in to the 15 and let's see what the price did. All right, so look, notice how we did use this as support right here, and then the price broke through it. Now this candle, you could say, actually came back to test it as support, but I want to see the price move down and then come back up to really say, hey, that's being used as support. So we could see that in the morning. This is the 676 level, right? 675.93 to be exact. But just keep that on watch for tomorrow or the next few days, because when the market does go down, however far it does want to go down, and it does pop back up, then this is an area you want to keep on watch to potentially make some money toward the downside. All right, so what would I do? I would wait for the market to get to this area, and I would buy some put options, because when the market goes down, the put options value goes up. All right, so that's that. Now we're just gonna show you what one of our members did in our community. So we got my brother Jumpin' Jack Flash, who bought some put options on SPY, and he made 212 bucks. All right, so this is just one of his trades that he took in one day. I believe he traded maybe 3 times, and he also has some profits trading a Netflix call option. So you could make money on the price going up, but in bear markets, just realize that you should take your profits a lot quicker, because you don't know if the price is gonna come back down. All right, now we do offer some insight, and we have lots of plays in our Discord community, so the link is in the bio if you guys want to join. And everything that I'm teaching you here is very general, honestly. Even though it's some super good information, I do have more inside of my course where you could actually learn exact way how to draw, exact way how to analyze, and exact strategies that I use every day, and I teach to my members that just want to get straight to the point and make some good money with good analysis and repeatable processes that actually works and has been proven to work over a number of years in any market condition. All right, so the whole name of the game is to adapt with the market, and just realize when you're wrong, realize what you got to do when you're right, because you don't want to hold on to your money too long and watch it go away. So whether you're winning, whether you're losing, there's always something that you have to stick to, and we provide a good game plan to help you be consistent. So you guys can follow me on Instagram, TikTok, Threads. You guys already watch me on YouTube, so you might as well subscribe, because I'm gonna have some more gems coming your way. And go ahead and like this video, share it with any other traders or anybody who wants to get into the markets, and I'll see you guys in the next video. Peace.